now, I would like to maybe add, first of all, it's a pleasure to be here today, so thank you very much for the organizers for the invitation for today's event to present our view here around our view on the Central and Eastern European insurance markets. I think we can give some kind of insight into the market, given the fact that we are rating the largest insurance companies which are operating in the market, which are Vina Insurance Group, Unica, PZU, Triglav, and number of others companies. So I would like to start with, like, as it was said, insurance penetrations in the Central and Eastern European market is very diverse. So it's very difficult to give a broad overview of all markets or all trends, because it's such a diverse markets. We have markets which are highly penetrated, and we have markets which are on a very low level of penetration. So to say it more about the region, maybe it's a better view to look on the most important markets in the region currently, which are the Polish insurance market and Czech insurance market. These two insurance markets are currently representing around 60% of the premiums of the market, and any difficulties on these two markets or any kind of developments there are instantly driving the markets. So in last couple of years, we've seen that, as it was also presented from Xprim, we've seen relatively mute growth of the premiums on the market, so it was almost no growth, and also the penetration rates declined. So from our point of view, this move is mostly related to challenges in motor insurance market, because as we see it, motor insurance markets in the CE region are extremely competitive. And this extreme competitiveness drives the price considerably down in the last couple of years. In our view, this extreme competitiveness was induced by entrance of large number of insurance companies before the crisis in 2008, which drive up the overcapacities. These overcapacities drive the market after the macroeconomic developments declined to extreme competition and price wars among several countries in the region. But in our view, the overall risks for the insurance companies in the CE region did not decline in the current years, because, as we can see, the bodily injury claims in the region are rapidly rising. And this rapid rise of premiums is increasing the costs of the insurance companies. So, for example, we have here example of Polish bodily injury claims, and as you can see, in the last 8 years, the bodily injury claims went up for more than 3 times, and we expect them to increase further on. This trend is not unique to Poland, but it's quite general across the region. Also in Romania, we've seen this trend in the last couple of years. The second, what I would like to point out is, in the last couple of years, of course, the claims went up, as just seen, but on the other hand, the companies known that the claims are going up, so they needed to adjust the business models. So there are several options of adjusting the business models, of course, as you all know. And some of the companies considered changed business model more towards the different kind of distribution level, to use more of digital solutions which are on the markets. On the other hand, some of the companies increased their focus on claims handling. And optimize claims handling. In our view, the second approach, so the optimization of claims handling in short period of time, reduce the pressure on the profitability of the markets. However, in our view, some of these practices which insurance companies were doing in terms of the claims handling are having negative impact on long-term underwriting performance of the companies and also on their business positions in particular countries. So this said, we've seen in the last couple of years, on one side, increase of claims, on the other side, reduction of premiums. So this resulted in the motor sector profitability, which is relatively very unfavorable for the sector. We've seen in major countries across the region combined ratios, which in the motor, obligatory motor, which is above 110. And this is not only in the last 1 year, this is in the last 5 years. And this is now pushing some of the insurance companies, especially the smaller ones and less diversified, to have considerable challenges to stay on the market. As a result, we have seen increased amount of M&A activity during the last couple of years, and 2016 was not different. It was, as you can see, there's considerable amount of acquisitions being done in 2016, while also some of the companies just disappeared from the market following the insolvency procedures. We consider that there will be still additional M&A deals in some part of regions because we do not consider that the market might give such kind of offer to the smaller companies to sustainably stay on the market. So now to move more towards the 2017 and in the current regime and what we see and what we might observe in the next couple of years. So we see 4 main trends in the region in terms of the PC insurance development. So the main trend in our view is regulatory changes. There we also see change in macroeconomic environment, more of the, let's say, interest of different stakeholders for increase of natural cat protection and Solvency II implementation. In terms of the main trend, we would see the main trend as regulatory changes. In the last couple of years, let's say not in the last couple of years, but in the last year only, we've seen number of changes of regulation in the main countries in the region. To name a few of them, KNF in 2016 introduced the recommendation for claims for claims handling in the motor. Additionally, in with 1st of January 2017, KNF introduced recommendations around bodily injury claim settlement. There was number of civil codes review in number of CE countries. So in Hungary, also in Czech Republic, in Romania, we've seen changes in motor law. All these changes are, of course, additionally affecting the claims, and the claims are going materially up again. And this is subsequently driving the companies to increase the prices. We have seen, for example, in the last 1 year that the MTPL prices in Poland on average contract went up for 45%, which is somehow very steep growth for only 1 year. And we are, however, unsure that with this current development of premiums, whether the profitability of sector will be gained back after several years of losses. That said, the market is also developing, and regulatory practices are evolving. And we might see in the next months and year to come that there might be some further changes in insurance landscape. So to move, as we said, the regulatory changes are the most important, but we shouldn't forget on other aspects as well. So we think that macroeconomic environment is now more stable in the CE and this is improving. However, this is still quite reliant on the Western European markets. But nevertheless, we've seen that more stable and solid macroeconomic environment could push up demand for certain lines of business. So in particular, property risks and as well as motor haul, as we can already observe now in the last couple of months when the motor haul is rising in a couple of countries across the sea. So now to move maybe a little bit away from the property and casualty lines and to focus a little bit on the life insurance, we heard today a lot around new IDDD and all other regulatory initiatives. So a lot of stuff's also there going on for the insurance companies. We think that IDD implementation and surrounding regulation in the CE countries might help the countries to solve some of the legacy issues in the region. And there are quite some legacy issues on the table. And these legacy issues will come with a cost for insurance companies. And this cost might be quite material. So some solutions for some of the legacy issues might be quite damaging their overall performance in the next year or two. And then to add up additional costs from implementation of IDD, we are at the level that number of insurance companies might get reconsider their position in the CE region, whether they will still stay in if the life insurance business will still be profitable for them going forward. Of course, the macroeconomic environment is improved, but the question is at what costs this will come to the insurance companies. So from the policyholder perspective, of course, we think that the IDD directive might improve transparency of the products, which was one of the issues in the past for the companies, especially in unit-linked business. But in terms of the costs, it will also come with a cost to them, because as we already seen, some of the countries already adjusted some of the legislations, and insurance companies are now coming with the new products, and these products have considerably materially higher costs in there. So it's questionable whether life insurance for the policyholders will remain, will become more appealing, or there will be just other competitive savings products. We will see. But currently it looks like that IDD might come with some unwanted consequences for the life insurance markets. So from our perspective, from S&P view, we are always doing this assessment of the CE markets based on where we, of course, we always rate the companies, and based on the rating of the companies, we need to assess the markets where they are present. We are with this doing our own view on the markets, and according to our view, the markets of CE countries, in particular Poland, Czech Republic and Slovenia, are at intermediate level, which is somehow comparable to some of the Western European countries. However, we know that each and every country is, as said, different, and each is facing its own challenges. Also, we shouldn't forget that insurance business, it's not only about the insurance market itself, but it's also about the country-specific risks. And we see that the country-specific risk, for example, in Poland, might be somehow higher than in some other parts of the CE region, in particular, for example, Czech Republic or Slovenia. Therefore, we've seen Polish insurance environment more risky than environment of Czech Republic or Slovenia. As said, we are doing regular surveillance of these markets, also regular surveillance of the main insurance companies in the region, and we are also forming our views, which we publish in a normal either comparison articles or articles around the market. So if anyone is more interested around this, feel free to have a view on some of our publications. Also happy to send any kind of additional publications if interest. With this, I would like to conclude my presentation. Thank you very much for your time and your attention.